Happy Friday, traders. It is Friday, August 29th, 2014, 8 a.m. Chicago time. Thanks for joining me each and every day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. As always, same routine every day, running down the overnight news just to have a macro picture. Eurozone August CPI estimate, it came in line year on year at 0.3%. Core CPI is higher than expected. German July retail sales miss. They come in at negative 1.4% month on month versus plus 0.1%. That's quite a miss. Putin's calling for a creation of a corridor for Ukraine troops. The Ukraine claims that this proves that separatists are controlled by the Kremlin. The separatist leader, Ukrainian separatist leader, is saying that they want to open this. They agree to open this corridor up. So Putin asks for it. The separatists say sure. Obama says to deepen economic pressure on Russia, further sanctions will be considered in discussions with Germany. U.S. personal income came in at 0.2% versus 0.3%, slightly lower. Canadian quarterly GDP annualized Q on Q came in at 3.1% versus 2.7%. That's very, very good. U.S. PCE deflator 0.1% in line. And then JP Morgan, for those of you who trade the euro US dollar currency, JP Morgan announced that they expect Q1 euro US dollar pair to move down to 1.28 versus 1.3 previously. As far as what's ahead, at 8:45 Central today, 8:45 Central, just 15 minutes after the open, we have Chicago PMI expecting 56.5. Now remember, this is a subscriber number and it comes out early. So generally the market starts to move. Participants who subscribe to the number start to take positions around 8:42, 8:41. At 8:55, just a few minutes later, the University of Michigan final at 80.0. Nothing further on deck today. Okay, so let's look at what we did yesterday. So yesterday was really interesting. Market was very, very disciplined how it tested out. The primary hypothesis yesterday was an initial. As always, the YouTube video is available for you from yesterday to watch. It's unedited. It goes up. The broadcast goes up immediately after the broadcast is done. The recording goes up immediately after the broadcast is done, so you can kind of see what was expected versus what the market did and how that is shaping today. And that's the whole point behind these Trader Bites. And before these Trader Bites that started about a year ago, all of those tweets that I would type in the morning to set up market context and the ideas for today. The goal here is to show that having a methodical but holistic approach to the market, as opposed to just looking at pivots or one specific indicator or a set of indicators, to have a holistic view on the auction itself, not thinking of price as an entity in and of itself, as a driving entity, but to think in terms of an auction and the participants in it. This is what gives us this much broader bias and much stronger position once we build the confidence to actually believe or trust how we've read the market. So a lot of people are getting that, and I'm happy to see that. Yesterday, the primary hypothesis was for responsive buying on the open, and a test of 93.50. 93.50 and 92.75, 93.50 is what we talked about, and then the expectation is for it to rotate back down, chop, 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 and it's likely to break lower and test lower prices, 88 being the key price below, and then the what auction levels are available below us, 86, 80, 50, and so on and so forth. So with 85, 75, 86 being the other key below. What it did was actually, let me extend this out. Let me put in 20 profiles so we have those levels. What it did is it tested lower first, so it chopped around. We had an opening swing. Sorry, let's see. We had an opening swing here at 91 and a quarter to 88.75. That's our initial rotation. You can see it here. Rotated up 91 and a quarter, found sellers, immediately moved down to 88.75 before it recoiled back to the open, and then it ended up breaking it to 88, 88 being this naked gap, this gap close. As soon as it hit the gap close, a very strong rotation up, very motivated buyers come in. You can see that tapered pretty good. This is a very, very good low, and it pushed right to the initial test that we expected for 93.50. What I said in yesterday's talk was, TraderBite was, if it's not able to take the 93.50, it's likely to rotate back down, chop around, and fall. Expected 88, 86, and then and so on below. What it ended up doing is it ended up falling through, which set us up here pretty nice for a lower high and then a rotation down. But what it ended up doing is it fell through into the opening swing, into the mid, all the way down through the opening swing, and then it came back out, held the mid, and then moved into the prior day's range. That was hypothesis number 2. So essentially what the market did is it played hypothesis 1 early, up to this point here, up to about 9:30, and then it switched gears to hypothesis number 2. Hypothesis number 2 was for it to test and breach into the prior day's range and to target 97 and a quarter. 97 and a quarter as the key price above, and then if 97 quarter does not hold and it has some energy in it, buyers, motivated buyers, then the next level up is 2075. With the ultimate target being 2005 above. And what it ended up doing is pushing through into the range, chop, 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 chop for quite a period of time here, for about a half hour, and then it finally pushed into the value area, which was a valid value area from Wednesday, and hitting, actually missing the 97 quarter by 1 tick right here. That's when I tweeted that, you know, it kind of got there, and then what it did is the point of control shifted up at the end of the day right here. You can see this pink line moving up. It tracks the point of control. Point of control shifts up at the end of the day, giving us some pretty decent fuel for a push up, and the market touches 97 and a quarter target for Hypo 2 in the very, very last 15-minute period. Left us with a very weak high, and as I tweeted out yesterday, what was the tweet? I retweeted it this morning. Someone asked me, do you expect a new high tomorrow? That was 15 hours ago. And I wrote back, depending on the Ukraine situation, if nothing further happens, then target is 2005 even, 2005 even. That was last night. I think it was 9 o'clock p.m. my time when I sent that out. So that puts us at 2005 up here. What the overnight session did is it opened and it could not go any lower, and it continued to push higher. So it took out this this weak high as expected, and is pushing through to new highs. It has put in a new high by 4 ticks, and it's holding steady under 2000 right now. So we're back to the bull run as expected. So here it is. Opens right where it closes, 1 ticks to close, and sideways, and then immediately starts climbing up to 2003.75 here on the European Open, and it's been sideways since. The profile overnight is very stocky, no consensus here. No consensus on price. I do not give too much validity to the overnight point of control here, 2001.5. It could easily move back down to 1999. It looks overall, the bottom looks steady. The high looks steady. There's not much we can glean from the overnight session. Overnight inventory is slightly long, but it's not by much. It really is pretty much even. So not to glean from the overnight session. This morning, the expectation, the primary expectation based on the configuration we have here, the primary expectation is for it to open up, chop around, likely to encounter resistance on the upper distribution of the overnight here at 2,150. Fighting this 99, the point of control might shift to 99 before the open. It has 20 more minutes of trading in this area to cause that shift. It's likely to take out the overnight low first to fulfill the overnight statistic, and if it does, then it's likely to test 96 and so on. I expect it to find a base of buyers up in this area before it turns around, and the target for today is 2005 even. Where does the 2005 even come from? That's a question that I was asked on Twitter. It is from this swing right here, the 1750.60 back down to the 36 quarter low we put in, projected 162% gives us 2005. The measured moves, I consider them to be a more rough, more of a rough estimate or rule of thumb kind of target, since there's no volume up in that area because an auction had not taken place. It's not as definitive to me as having an auction and having some sort of information on volume and where it happened for me to base that assessment by. So that's the idea. If we push down, if we have responsive selling and push down into 96 and then fail to hold this 94.50 area or so, then it's likely to retest the opening swing high, which is value high, 91 quarter. This value is not essentially valid. I don't see this as a market finding value. This here is being calculated by a mathematical formula, and the program colors it in. So it's not essentially a valid value area, but brings us back down to 91 and a quarter, and that's the extent of that. There's nothing here. There's nothing today that's likely to drive the market other than news. We'll see what Chicago PMI and the Michigan sentiment do, but they'll be done quite early. They'll cause some volatility quite early, but the market's going to be is likely to be resuming its uptrend. So if you're short, look at options or whatever you want to hold on. It's best to just cut your losses and wait for a clear opportunity that the market gives you to take that short bias. It's amazing how many people insist on being short, even though I don't see, at least from my perspective, and everybody's perspective on the market's different. From my perspective, I don't see why why a strong short swing bias is valid in this market. Anyway, so that's that. I'll leave you with that. Remember to like these videos. Liking these videos brings us up the ranks on YouTube, and especially for Google Hangouts, so that we can start broadcasting in 1080p, so you can get the same definition on your screen as I see on mine. It doesn't cost you anything. We're not paying for the service. It's a free service from Google, and if I get enough likes and viewers and so forth, they'll allocate. It's a sort of a lottery. They'll allocate more bandwidth and enable that on my broadcast account. So I appreciate you liking and following. Have a great Friday. I'll leave you with the typical Friday message. It is Friday. It is not a good day to stake a lot of your account or hold a stubborn position or take a big loss. This is a day where you really need to exercise discipline. And you know what? everybody has loss limits for the day. Everybody hits a loss limit for the day. For me, it's typically twice a month or so, and you just stop. And the good thing about Friday's loss limit is that you get to start your weekend a little bit earlier. The bad thing is you get to carry that in your head all weekend long, but you cannot control what you don't know, and there's no way of knowing what the market's likely to do. The idea behind this is you're reading how the buyers and sellers are interacting in this market, and you're waiting for an opportunity that gives you a probabilistic edge, that gives you a better opportunity to have your scale or your target than your stop. You're putting your trade on, and then all else is up to the market to play out. And those are the basics, okay? So I'll leave you with that. Good luck, and I'll talk to you on Monday. Take care.